After we complete our cash budget, we can prepare the budgeted income statement and balance sheet. Let's first take a look at budgeted income statement. For income statement, we use traditional income statement. We start from sales minus cost goods sold to get gross margin, minus selling and administrative expenses, we get operating income. We minus interest expense, and finally, we can get net income. Here, interest expense is not operating expense. Operating expenses are incurred because of a company's major business, but interest expense is because of our borrowing. So we separate interest expense from selling and administrative expenses and exclude it from operating income. Let's take a look at numbers here. For the budgeted sales in units and dollar amount, we can get it from sales budget. For cost goods sold from ending finished goods inventory, we've already calculated product cost per unit, $4.99. And for total cost of goods sold dollar amount, we use product cost per unit multiplied by units sold. 100,000 is expected sold units for the quarter. So we can get the total here, $499,000. The difference between sales and the cost goods sold is gross margin. Selling and administrative expenses, the number here is from selling and administrative expense budget. And we subtract 260,000 from 501,000, and then we can get operating income 241,000. And then minus interest expense, which is from cash budget, and then we can get net income 239,000. So this is budgeted income statement for Roll-Year company. Moving on to the budgeted balance sheet. We have additional information here. Roll-Year reported the following account balances prior to preparing its budgeted financial statements. Land, $50,000. Common stock, $200,000. Retained earnings at the beginning of April, $146,150. And equipment, $175,000. Budgeted balance sheet is prepared based on the accounting equation. Assets equal liabilities plus shareholders' equity or stockholders' equity. So we first organize asset accounts. We have cash number 43,000. That's from cash budget. Accounts receivable. We need to calculate the accounts receivable balance. Remember, for purchases, 75% will be collected in the same month. 25% will be collected in the following month. So for June's sale, $300,000, 25% has not been collected, and this is a balance of accounts receivable. We calculate $300,000 multiplied by 25%, and then we can get 75,000. This is accounts receivable balance. For raw materials inventory account, if you go back, take a look at the direct materials budget, the ending balance of the quarter for raw materials should be 11,500 pounds. For each pound, it costs 40 cents. So we can calculate the total dollar amount for raw materials inventory. 11,500 multiplied by 0.4, and then we can get $4,600. finished goods inventory. Ending finished goods inventory in units should be 5,000, and production costs per unit $4.99. So we use 5,000 multiplied by 4.99, and you can get ending finished goods inventory 24,950. For this number, you can directly find out from the ending finished goods inventory budget. Land, the question has told us 50,000. For equipment, the beginning balance for equipment 175,000. And if you go back, take a look at the previous slide. The company has purchased 143,700 of equipment in May and 48,300 in June. If you add those two numbers together, plus 175,000, you will get equipment balance 367,000. Add up together, total assets 564,550. Now for liabilities. Accounts payable balance, we can calculate based on June purchases. For purchases, half will be paid in the same month. The other half will be paid next month. So 50% of June purchases has not been paid yet. We can calculate 50% of 56,800, and then we can get 28,400. This is accounts payable balance. Shareholders' equity. Common stock 200,000. This is a given. For retained earnings, the question has told us beginning balance of retained earnings 146,150. To calculate ending balance of retained earnings, we can follow the formula. Beginning balance plus net income minus dividends. So we add net income. This is our budgeted net income from budgeted income statement we just prepared. We add this number to beginning balance minus dividends. This is cash dividends paid in April, and then we can get ending balance of retained earnings 336,150. We add up together to get total liabilities and stockholders' equity balance. This is the same as total assets. And this is our budgeted balance sheet. Let's review a little bit for the master budget. We start from preparing sales budget in units and dollar amount. And then we prepare production budget. Based on production budget, we can prepare direct materials, direct labor, and manufacturer overhead budget. Then we complete ending inventory budget. After that, we prepare selling and administrative budget. Based on cash receipt and cash disbursements from all above budgets, we can prepare the cash budget. And finally, we complete budgeted income statement and budgeted balance sheet. This is a long chapter, and finally, we finished.